Recently, I met with an industry expert who shared with me a unique strategy for wealthy individuals and business owners. So if you're looking for a way to fund life insurance in a way you've never seen before, watch the rest of this video so I'll show you and how you can break this down, where we may get the banks to fund these premiums for you so that you get to retain your capital, you don't have to pull cash, and at the same time, you could be looking at returns possibly in the 6 to 7% range. Hi, my name is Maiewski, and I'm a managing director with Redwood Tax Specialists. And the reason I'm bringing you this idea today is this is a phenomenal way for people to be able to hang on to their money and yet at the same time provide for estate planning purposes, a business succession where you're actually passing the business from one partner or family member to another. And at the same time, you get to continue to hold your money and make money on it, but at the same time, use the bank's money. You know what they call this? It's called arbitrage. This is where you can earn 6 or 7% and be borrowing the money at 3 or 4 or even 5%. As long as you're making more money on what you're actually paying in the way of interest. Is that a good idea or a bad idea? Well, it's a great idea. That way you're not using your money, and we all know that business owners like the idea of using other people's money in order to build a business or to provide additional capital within the business itself. In addition to this, it's unique in that you can participate in market gains. Remember, market gains without the downside of any risk, which means if the market's going up, you participate in the gain. If the market goes down, you don't participate in those losses. Sounds pretty good, doesn't it? This strategy allows qualified individuals to leverage what they currently have in the way of assets, use that as collateral to then take a bank loan, which allows the bank in order to give you the funds you need in order to fund a life insurance policy. And on top of that, you will pay either zero, in some cases zero, or just partial interest on the loan while the policy is being funded over the years. So funds participate only in the upside of the market and not in the downside. In some cases, we've seen anywhere from 3 to 7% difference on this arbitrage. So premiums are actually funded for 10 to 15 years, depending on your strategy and what it is that you're trying to accomplish. And at the end of that time, then you can have a loan is paid off, you can receive a tax-free income at that time, and in the event that something happens to you, then there's a huge death benefit that's also received tax-free to your family, to your charity, or however you decide to set it up. In order to qualify, you need to be between the ages of 45 to 65. You need to have a net worth of $5 million or more and have an annual income of $250,000. You need to be able to qualify medically, which means as long as you are in standard health or better, that will allow you to participate in this. You need to have tax or estate planning needs. You need to be comfortable with the idea of using credit in order to pay for this type of policy. You need to have sufficient cash equivalent assets in order to meet the collateral needs. You also need to have outside investment opportunities that you would like to pursue, and you also will have cash that's committed to other needs. If you meet this list of criteria, then we should explore to see whether this would be a fit for you. This strategy helps high net worth individuals buy the life insurance they need without liquidating their investments, tying up their assets, or disrupting their cash flow in their business or personal life. Borrowing money for premiums, you get to retain capital or cash to invest in outside opportunities, and at the same time receive a greater return on the cash value within these policies. And remember, this is only for high net worth individuals. Good news is, and I want you to remember, which is more important, the amount of money that you make or the amount of money that you keep? That's why we're here, is to help you retain more of your money so that you can retire comfortably and put yourself in a position that your family is never going to have to worry about this either.